welcome to this very special conversation on the Leaders of Tomorrow, India's only daily television platform for small businesses. We bring you the right information to empower you, the entrepreneur. Tonight on the show, a special conversation with two gentlemen to give us both a domestic as well as an international perspective. First up, my pleasure to introduce to us Nitin Rai, Chairman of the TIE Global Board. Also joining us tonight, Vijay Menon. He's the Executive Director at TIE. Nitin, let me come to you on this question. We very often hear from entrepreneurs on the Leaders of Tomorrow, entrepreneurs telling our experts, why don't Indian startups or Indian companies basically raise funding solely on the basis of an idea? You see a lot of that happening, say, in the US, you see a lot of that happening in Israel. But in India, unless you have, a proven track record, unless you've shown that you can really raise revenues, it's very hard to secure funding. How would you like to address that question? What would you like to tell the viewers of this interview about, what they should be doing? What perhaps is the way forward then?
So I'm going to answer it in two parts. Even in the US, and based on my own personal experience, concept stage companies do get funded, but we need some sort of validation, right? So it could be that they have some customer validation, maybe they have a contract, maybe they have a letter of interest from a customer, because we really want to see that this idea can sell, right? People can buy the product or service or whatever it is they're creating. A side sort of thing to this would be in certain sectors where there's a lot of R&D involved. Maybe there's a patent, and that patent could be perceived by investors that have domain knowledge about that particular idea or technology, where investors are willing to take a chance at a more concept stage. And in India, I can tell you that yes, I think the angel investors are a little more conservative. I've had that personal experience. They want to see the company maybe monetize some before they would invest. So there is a difference, and I think if Indian investors, especially the angel investors, would it would increase their risk profile, that more concept stage companies could be funded, but just an idea to be funded, I think those challenges are going to be the same no matter which side of the world you're in.
So one part of an entrepreneur's biggest sort of challenges, if I can call it that, of course, is raising funds and finance. The second is as far as hiring is concerned. My question to both of you gentlemen, both you Nitin as well as to you Vijay, is one, how do companies hire right? How do they hire the right employees, and how do they ensure that they're retaining those employees? Another part of retention is also customer retention. Most of the large businesses in India, when you speak with them, they boast of the fact that nearly 90% of their business is repeat business. What is the scenario for small businesses? What is your advice to them if they need to also ensure that they're getting retention of customers and keeping them happy?
Challenges with employee retention is that startups will always find it difficult to match big companies. But what they can offer is, the whole ability to learn. And that's what I think startup employees need to really look at, the learning that you get out of working in a startup, because you do a multitude of tasks as opposed to a larger company where you're working typically in a group or a silo. So somehow the startups need to sell that. And then, of course, long-term wealth creation is something that happens in a startup. So as you see more and more exits and employees making money out of those exits, then that cycle will start.
So I would concur with Vijay. I mean, in the US, that's a pretty typical model. And depending on the area and the region you're in, like Silicon Valley, it's very competitive. So there's always a shining object next door, and people are always chasing sort of the next big deal like a Google. But in smaller cities where I come from, in Portland, Oregon, it's really, people are looking for a little more stability, and they want to minimize the risk. So they want to be in general want to be in a larger company. So the way we attract employees in startups is through the equity incentive. And so on the India side, I think that model needs to be implemented. If it's not, and I think it has been implemented. But there's a number of companies that exist in India that are smaller companies. I have one in Pune, where one of the ways we incentivize employees is not a kind of a step-up growth, but growth in terms of knowledge, in terms of experience, in dabbling with new technologies is very important to them. And yes, holding employees is a big challenge, and you have to constantly give them raises that are above market, otherwise they're not going to stick around. And you have to challenge them, and they need to feel like they're learning a lot at a much faster rate than they would in a large company.
My next question is to you, Nitin. How does TiE as an organization help businesses pitch to investors or those who are funding businesses? And I also want to, sort of flip that around from your experience, and I'm sure you see multiple businesses approaching you every day to raise funding. Just use that experience to maybe talk to our viewers about what you're seeing as the flip side of raising funds, which is what you shouldn't be doing. Some simple don'ts for our viewers to say, if you're looking at raising funds, whether it's an angel investor, whether it's a PE, whether it's a VC, or going through organizations like yours, this is what you shouldn't be doing.
We have a variety of events and programs. We have a pitch event where we invite concept stage, any entrepreneur that has an idea to pitch an idea. And we invite our charter members who are successful entrepreneurs, their mentors, to listen to their pitches. We educate them on how to pitch to investors. So we actually tie in an education session around that, and they basically practice their pitch. Additionally, we have educational programs like we have a virtual accelerator program called TiE Excel, where we have a 5-week boot camp where we teach entrepreneurs about customer validation, about building their pitch, about building their business model, how to raise money from investors. So there's a variety of things that we teach them in a short period of time, and the end result of it is to put them in front of folks like me, mentors, and pitch, and then we have a pitch competition. So we have a number of pitch competitions that build a pipeline of these entrepreneurs that we eventually put in front of our angel investors. And that is happening in some form or the other, across the network.
TiE is a platform that allows investors and startups to, basically come together. And we do it all the time at our events and our programs. All of them are geared towards that, actually, that whole concept of networking and getting to know one another.
And we have about 2,800 charter members. Most of them are successful entrepreneurs, or they are constituents in the success of entrepreneurs. They might be attorneys or accountants. And we mentor them. We give our time to help them in all different kinds of ways. And pitching to investors is a big part of that mentoring. I listen to a lot of pitches, including people that are from the manufacturing sector. First of all, don't go to VCs who are not investing in your sector, okay? So that's number one. If there are VCs or investors who have domain knowledge of your business, those are the people who you want to go and talk to, first and most important. Secondly, they need to be subject matter experts. They can't just come in and pitch an idea and expect that they'll get investments. And at the end of the day, the exit is extremely important. When would they expect the investor to get liquidity? People who are in the tech business, know they have metrics, and these are pretty high rate of returns in a very short period of time. So manufacturing operations may not necessarily have that kind of outcome, a quick outcome. So convincing these investors on what the value is for them in terms of returns, and if they are going to take time, what is that return? Is it going to be cash? Is it going to be an acquisition? And presenting a data to them and getting them more informed about that sector is very important. And if you can do that effectively, I think people are willing to, especially in that angel stage, people are willing to take more risk.
No, I would just add that businesses that have organic growth, the chances of them getting funded are pretty low. So you got to figure out how you can really give return to investors, and it could be by differentiating yourself from competition and therefore growing inorganically in a sense, and that's very important for investors to see. So steady state businesses, typically VCs will not look at it. So you got to figure out how to get some amount of tech into your business and therefore grow inorganically. I think that's very important.
I just want to go back to my previous question as far as funding is concerned, but talk about bootstrapping. A lot of the companies that we speak to here on the show say that in the initial couple of years, they've bootstrapped. When we speak to experts to ask them whether their advice is that businesses in the first few years should look at having their own funds from friends or family, raise their own finances, the view is divided. I want to get your thoughts on this. Should businesses look at bootstrapping? And maybe we can get both a domestic as well as a global perspective on whether or not businesses should look for bootstrapping in the first few years.
I think it's all over the map. I see businesses that are bootstrapped. I started my company 25 years ago, and I knew I couldn't raise capital based on the approach that I was taking. So I bootstrapped it. But eventually I did raise capital. So I think it depends on the idea. It depends on the people involved in the business, and it depends on the investor that you're pitching to. There are certain angels or certain micro VCs that are willing to take a chance on just an idea, or if you are bootstrapped, even better. But sometimes bootstrapped businesses have a harder time raising money because you've kind of proven things, and then people are expecting more. So it all depends on what the business is, and that can drive the interest of the investor in a positive direction or in a negative direction.
Gentlemen, I am going to take a very short break on that note, but we will continue talking about your work when it comes to working with entrepreneurs, and also some of the tips that you perhaps have for them when it comes to expanding the business. Much more on the other side on this conversation. Do stay tuned. Coming back after just a short break. Welcome back with us here on Leaders of Tomorrow, and tonight we are continuing our conversation with two very special gentlemen very closely associated with the world of entrepreneurs, Nitin Rai and Vijay Menon. Gentlemen, thanks for your patience as we slipped into that short break. Let me continue talking though about some of the things that you're seeing for businesses here in India. Gentlemen, this next topic is something that is rather close to the hearts of all of us involved in the Leaders of Tomorrow. The issue and really the topic of women entrepreneurs here in India, why you don't see enough funding, why you don't see enough mentors for women entrepreneurs perhaps, and also talking to and talking about women entrepreneurs. And we've introduced a segment on season 7 dedicated to talking about some of these issues. So I want to talk about your project AirSui, and you've moved now to 2.0 version of that. So what has really been your experience when it comes to working with women entrepreneurs, some of the significant highlights or the kind of growth that you've really seen in that project? Can you share that with us?
I think when we started it last year, I think actually in 2016, the first year we impacted exactly 125 women entrepreneurs, and it was funded by the US State Department, and we did it in tier 2 and tier 3 cities in India. The 2017 AirSui 2.0, we impacted another 150 women entrepreneurs, so a total of 275. And what we're seeing is now that these 275 women have further gone out into their geographies where they live and work, and they in turn have now impacted almost 600 women entrepreneurs. That's what we see now, and we've got a group of 600 women entrepreneurs who have actually been touched by AirSui. The AirSui program, apart from the workshop that we do, also has a component of online mentoring, and we try and match mentors from all over the world. So we look at domain and get the right kind of mentors from all over the world, which will add greatest value to these women entrepreneurs. And many of them, we've seen them grow their businesses successfully. But more than anything else, I think it's given them that great confidence to go out there and pitch their companies and talk about their businesses, and that's been wonderful to see. So I think you'll start seeing the benefits of AirSui in the next 1-2 years as some of these women break out and get funding and build businesses that are of scale.
So let me add to that. You had another part of your question around mentoring and raising capital, and why there isn't as much capital available to women. I actually have a fund called Elevate Capital that targets women entrepreneurs. And 60% of my portfolio is women entrepreneurs all across industry. So one of the challenges for women, based on my 2 years of experience, I mean, I have my pipeline of entrepreneurs looking for funding is more women than male or men. And one of the challenges for women is that you had an earlier question where these women come in with far more baked ideas than the guys do. So the guys come in with a concept stage and they can, talk their way through convincing investors to invest in them. Women come in with proven concept, proven revenue. Where I find that they have challenges is they have some of their own barriers in terms of asking for money. They have a difficult time asking for money as well. It's not that they don't want to ask for money, but they have a very hard time asking for money because they want to keep proving themselves that they can do it themselves. So that's one challenge. The other challenge is that because there aren't as many women entrepreneurs coming to the forefront, the investment community treats them as high risk. And people are not intentional about this, right? So there haven't been as many success stories yet, especially in the tech business. Now that's changing because we know as investors, a person like me knows that women actually tend to produce better results than guys. And part of it is their ability to do more with less. And I think that data is just not out there right now to the larger investment community. So people have to take more risks, and the more voices we hear, the more programs like RSWE are introduced, the more mentoring women entrepreneurs seek out from guys, I think will make a difference.
I was talking about mentoring in my previous question, and Nitin, my question is primarily to you. But we want to talk about mentoring. One is for women entrepreneurs, and I just want to pick up on some of the things that we've heard so far in this conversation, but also to talk about mentoring for small businesses. If, for instance, a small business doesn't have access or doesn't have investment from a VC, from a PE, from an angel, and therefore doesn't have access to a mentor through that route, how crucial is it that they necessarily then find that mentor who can help the business grow? How should they do that?
Well, mentoring is critical, period, whether it's fundraising, whether it's scaling your business. I think mentors make a huge difference. We know from experience, I know from experience as an angel investor and now as a VC, that entrepreneurs that are more willing to listen to their advisors and mentor and are transparent are likely to have a higher rate of success. And I find that women entrepreneurs are actually better listeners than guys are. They're more open to listening. You just have to build a trust. And I think that trust factor is what differentiates a woman entrepreneur who is able to get mentoring versus one who isn't. So they've got to build the trust, and the mentors who are on the other side need to be a bit more patient and need to work with them in a very trusting manner so that they build trust over time.
My last question is specifically with regards to Chai. You are, of course, you've been funding businesses for the last 2 decades. If you can talk to our viewers about the kind of model that you're working on, correct me if I'm wrong, but you're present in about 60 countries across the world. How do you select these countries? How do you select the businesses? What role perhaps does government regulation maybe play when it comes to you selecting these businesses? Any sort of information that you can then leave us with?
When we look at expanding, and opening up a Thai chapter, I think we look at broadly 3 things. I mean, we look at the people who are going to be behind that chapter, the charter members that are coming together to form the chapter. We look at the broader economic environment in that region. And thirdly, we look at the policies that the local government has. So if it's startup friendly, if it is if it supports the entrepreneurial ecosystem, then it becomes that much more compelling to open a Thai chapter. And what we also do is, once we have a chapter on the ground, then our charter members spend a lot of time influencing local government policy. So we're actually able to add value to startup policies, and we've done that even with the Indian startup policy. I mean, our charter members from Silicon Valley actually advised Prime Minister Modi on the whole Startup India policy, And some of the stuff that we recommended, what came out in the startup policy that India launched in terms of offering tax breaks to startups, etc. These are all recommendations that we came up with from Silicon Valley, one window clearance, and so on and so forth. So, so our chapters, play that role.
I think, especially in India and countries where there are, different regulatory environments than in the U.S. I mean, in the U.S., where we seek support is public investment. And so, for example, in Oregon, our TiE Excel program, because we're targeting women and minorities, we get a lot of support from the local city government that is, trying to make an impact and increasing entrepreneur activity in the what they call the underserved community. So that's a big deal, and TiE does a really, really good job with that because we're a nonprofit, we're a give back organization, and we are a bunch of very, very successful entrepreneurs that are giving our time as well as our money. So that works really well. But in general, when we launch a chapter, we do have to look at the overall ecosystem. We want to see the people that are starting the chapter are plugged into the local entrepreneur ecosystem so they can partner with other organizations to build the organizations. So that's very, very important. And then also that there is a pipeline of entrepreneurs. I mean, you could start a chapter where there's a bunch of wealthy people that want to give back, but if there isn't a pipeline of entrepreneurs, then there's no point starting a chapter there.
And I'll just add to this by saying that our TiE Bangalore chapter did a very interesting and impactful program called Elevate 100 along with the Karnataka government. So the Karnataka government put aside a fund of almost 250 crores, which they wanted to give to 100 startups as a grant. And they came to TiE and said, look, you guys work with startups all the time. We need your help to identify those 100 startups, because otherwise, you have all kinds of other influences that come into the picture. So TiE Bangalore helped the Karnataka government run this program called Elevate 100, where 2,500 applications were received. We whittled it down to 500 and then finally helped them to identify the 100 startups that would get the funding. It's been so successful and so impactful that the government is repeating it again. Right now it's running in Bangalore and Mangalore and Mysore and some of these cities. So I think governments can make a big difference if they work with organizations like TiE, which are focused on entrepreneurship.
All right, Vijay Menon, Nitin Rai, thank you very much for your time here tonight. That's our show. That's all the time we have, unfortunately. But if you want to hear more from the two of them, if you want to hear more about the perspective of businesses, do get in touch with us. We promise to have all your questions answered. Here's how you get in touch. leadersoftomorrowtimesgroup.com is our email ID. On social media, tweet at me at Sunanda_J or our official Twitter handle, LOT_ET Now. You can also get in touch with us on our Facebook page, Leaders of Tomorrow on ET Now. Thanks for watching. Have a good night.